Welcome back, and joining us on the show now is Peter McGuire of Exim Australia. Peter, hi, good to have you. And what a last week it has been when it comes to gold. All-time highs hit every single day. It perhaps was the best week that we saw since mid of October, with nearly 4% of gains at almost $2,200 per ounce. What's your sense? How is gold looking to you on charts?
Well, good afternoon, Manisha. I tell you what, it knocked the ball out of the park every day, and it's still sitting at 21.85 now. Hasn't been a lot in Asia trade, but it seems to have a lot of momentum. There's a lot of fear out there in the sense of what's going on with rate cuts. Is it going to materialise, and when's the date? And that's really added horsepower to the price of gold and certainly silver. So, yeah, I think it's got some more legs yet, Manisha. Don't write it off.
The market seems to be really factoring in that there's a possibility that we could see a rate cut happen in the month of June. Now, how much of that has the gold prices factored in already?
Well, I think it has. It's taken some of that on board because naturally they think as far as the attraction and is it going to be June? Is it still going to be 95 basis points for the US for this year? You've also got other central banks looking at cutting rates. So the whole storyline is going to be, one of rate cuts pretty much from mid-year onwards. And I think the market's just realising the state that we've had big push-ups as far as equity markets, and the overall momentum is, they're finding a new home, and that's where the smart money's flocking to.
It clearly is. And $2,200 per ounce was a level that the street anticipated in the second half of this year once the rate cuts actually started. But we've already done that. So is it really buy the rumors, sell the fact kind of a thing that you see playing out here? And the other thing is, what's your sense now for prices for the rest of this year?
Well, Manisha, I think it got ahead of itself, and maybe it has, but that momentum has really been aggressive, and you can't get into the way of a market that is so, I suppose, dynamic, and it's really hit everyone between the eyes over the first 2 months of the year, and really it's only in the last month that it's really gathered some steam. As far as price, I told you something off air once, what I think it's going to be. I'm not going to share that with the world right now, but I think it's got more legs, and I won't be surprised for a 22.50 to 23 handle, maybe sometime by May. So I think there's more upside, Manisha, and and I think it's got even further to run in 24.
Peter, of course, rate cut is one part of it, but the global central bank buying, as you mentioned, and then the geopolitical tensions, is that premium something that the gold is also faring off because?
Well, yes, I mean, they're very much so, and we take on board those sort of considerations, Manisha. You can't get away from central bank buying and geopolitical uncertainty. And of course, interest rates and just, the state of the US economy as far as, job numbers and what you're seeing as far as debt levels at all-time highs. So, yeah, the attraction is very, very strong. And that's domestically as well, in the sense India, all across Asia, really flocking to it. So, yeah, I think it's a very dynamic market, and a lot of people are putting more under the bed every day.
Oh, well, yes. I also want to understand, while, of course, global central banks are buying, we've seen ETF outflows continuing. There are those people who are actually taking profits out as well. But at these current levels, would you advise a buying for an investor, or would you wait for a profit taking that the markets do believe is definitely coming because the price turn has been too much too soon?
Well, Manisha, it depends on what you're trading. I mean, if you're just buying it for short term in the sense of paper market and you're trading derivatives, then yes, and you be careful as far as the leverage that you use. If you're buying physical gold, well, it just keeps on defying logic, and I think everyone's realizing that it's a great tool, or not even a tool. It's a great asset class to be a part of, and it's been across, for millennium in the likes of India and all through Asia. So I feel as though that attraction isn't going to wane anytime soon. And just be conscious if you're opening positions, what your risk metrics are, and markets can wash out quickly, but they can also go for a gallop very quickly.
So even last year, for that matter, while we did do an all-time high of 2,075, it was also a low of 1,810 that we saw. So it was a huge range. For this year now, do you see prices going below 2,000 at all?
Oh, Manisha, look, it's so difficult to say, and I wouldn't like to, go out there on a limb and say it, but I wouldn't be surprised because of just sheer volatility. And that is just, the name of the game when you're talking about the likes of gold and other markets. But if you saw geopolitical concerns really start to ratchet up, we're in election years, we've got a lot going on in 24, then hey, it might wash out 100 or 150, but I think it's just going to be hold on to your hat because there's going to be some really dynamic moves ahead, and we've got 10 months to run till the end of the year, or 9.5.
Well, absolutely. There's just so much that we don't know right now, but the gold price is definitely treating you to a kind of rally, which the markets actually have been caught with surprise on. Peter, as always, thank you so much for joining us. With that, let's slip into a short break. We'll get you more on the markets on the other side.